Well, hi guys, welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka. Well, it's been a subdued start to a festive week given the fact that we ended below the 20,150 mark. In fact, somewhere around the mid point of the day, we were trying to reclaim that 20,200 mark, but it was a failed attempt. Given the fact that we have ended literally at the low point of the day. If you look at the mid and small cap end of the markets, even they have clocked in losses of somewhere around 0.5% or thereabouts. But PSU banking pack was shining, and how, given the fact that that index has gained somewhere around 3.5% in today's session after clocking a 7% rally, last week. If you look at some of the other movers, FMCG and autos were some of the gainers in today's session. But what didn't do very well was the IT. Pharma, metals and realty, end of the markets that came under selling pressure. If you look at the Nifty gainers, you had the likes of Power Grid, Titan, M&M that has hit a fresh record, NTPC, BPCL, these were some of the gainers. On the losing end, you had the likes of HDFC Bank, Hindalco, Dr. Reddy's and some of the tech giants like Infosys, Wipro, HCL Tech and the likes were among the losers. As I was mentioning, the mid-cap end of the markets was under pressure today, but the PSU banking pack was shining bright. So on the Nifty 500, some of the gainers, featured from the Nifty PSU banking pack. So IOB, UCO Bank, Central Bank and the likes. Bank of India, in fact, also among the gainers. And Easy Trip was another one that was, on the gaining front. But on the losing end, you had Vodafone Idea. That stock was up and about last week, so came under some bit of selling pressure today. Some of the fertilizer names like GNFC, Fact, these were under pressure. Raymond, Syngene International, in fact, these were some of the other stocks that weren't doing all that well on the Nifty 500 index. But let's talk about the Nifty PSU banking index. The market cap for this, particular index has crossed 12 lakh crore rupees today. In fact, it has added 1 lakh crore in just 7 trading sessions. If you look at, the index, it was up somewhere around 7% over the last week. Mind you, SBI, the biggest PSU lender, has been an underperformer versus peers on the Nifty PSU Bank index. In fact, some of the other top performers on the Nifty PSU Bank have been the likes of Indian Bank, IOB and Punjab and Sindh Bank. But before I get any further, let me also bring on board my guest for today. Joining me is Amar Deo Singh of Angel One. Hi Amar, thanks a lot for taking out time and joining in this afternoon. Clearly last week we hit a fresh high, 20,200 on Friday, but we started a festive week on a subdued note, so to say. But here on, do you think it was just a one-off and maybe, we can resume the up move on Wednesday after a one-day break? Or do you think it is, the start of a little bit of a consolidation that the market is actually expecting after the kind of record highs that we've seen?
Yeah, very good afternoon. I would say that we shouldn't be too much concerned with these minor negative moves because the overall uptrend remains intact. And also what we are seeing is that across the board, we are seeing this across sectors and across multi-caps. And also if you look at the data, so the data also clearly tells us that somewhere or the other, we are seeing a broad-based rally. And more than 83-84% of the stocks are trading above the 200-day moving average. We are seeing healthy advanced decline ratios, and also we've seen some very good sizable build-up happening on the derivative side. So I would say that one shouldn't read much into it, but yeah, it's when the markets trade at record high, so there's always some concern because you don't have historical background where you can refer, check. So that is a concern, but given the sort of movements we are seeing across the board, as you rightly said, the PSU index or the auto index. So we are seeing this rally, which is there to stay. And the best part is that India VIX also is not showing any signs of concern. But there are two important trigger points which we definitely need to watch out for: crude oil prices, because if that continues to sustain above the $90 mark and sustains there for some time, then that could have some inflationary concerns going forward. So that could have an impact. And the second is the US Federal Reserve outcome and the forecast. These are two, I would say, immediate triggers which would have an impact on not only Indian markets, global markets as well. But in a nutshell, I would say the technical parameters, derivative parameters, and across the board, the uptrend remains intact. Yeah, dips should be looked at buying opportunity, but at the same time, valuations will also have to be looked at.
All right. You mentioned crude. So I want to get in your thoughts on how the paint sector as well as the aviation sector should be looked at the juncture. Asian Paints, of course, has been under pressure last week, I think a better part of the last week. Today we did see a mild comeback. But how should one look at some of these paint makers now? And secondly, aviation. For Interglobe as well, rising ATF prices and, rising crude remain a risk, but airfares remain elevated, right? So how should one play some of these, stocks now, Asian Paints, Interglobe, Berger Paints and the likes?
Yeah, so first talking about Asian Paints is clearly I would say it's in a consolidation zone. So if you look at the long-term charts, they clearly point towards that the stock is not going higher in a hurry. That is very clear. So be the monthly charts or the quarterly charts, they clearly show that there's not much bullish momentum in the stock on the upside. So it could be more of a trading range. The downside, yes, seems to be supported around the 3,000 mark. So 3,000 on the downside and 3,500 on the upside. That's the range currently. It's around 3,200 or so. So that clearly tells me that the stock is in for consolidation. And talking about the other paint stock which you mentioned, if you look at Berger Paints here, somewhat I'm seeing a different sort of trend as compared to Asian Paints. So Berger, I would say, still remains very strong on the monthly charts. The consolidation period seems to be over, but till the time we don't see the stock sustaining above the 780, 800 mark, it could be in for consolidation. But definitely, it's in favor of the bulls as far as Berger Paints is concerned. Now, talking about the aviation sector. So if I look at Indigo for that matter, so what we are seeing here is that the stock has had a major upside because earlier 2000 level was a level of consolidation. The stock was unable to reach that level. It's sustaining above that level, currently around 2400 odd levels. So if you ask me from a long-term perspective, the stock remains strong and firm. Yeah, crude oil prices, they could play, and ETF prices also, they could play spoil sport. But overall, the stock seems to be very strongly supported around the immediate level, if you ask me, somewhere around 2200 odd levels, with the long-term trend, uptrend remaining intact for Indigo.
Right. I also want to get your thoughts on an easy trip. This stock has had a great run, but you have competition coming in. From the likes of Yatra. The IPO, of course, will be closing. In fact, I think it has just closed, or I think it's closing on the 20th of this month. That will also make its stock market debut. So when it comes to easy trip, would you say is the right time to kind of book profits, partial profits at least, given the fact that it could see some pressure when Yatra makes its debut on the last street?
Yeah, I would say that Ease My Trip witnessed some sort of consolidation around the 38 levels and completes around 44, between 44 or 45. But the trend remains strong for the stock now, because the stock needs to sustain above the 45, 46 level. That's going to act as a very crucial zone in that stock. If the stock is able to breach the 45, 46 zone, then the stock is definitely headed higher towards 55, 60 odd levels, because some of the technical structures clearly point that the stock is in for some upside move. And also what we've seen is that there's an increase in smart money flow, and the volumes have also picked up recently, so that these are positive signs for this particular stock.
Right, Amar, I want to get in your thoughts on Bajaj Auto as well, given the fact that, we've seen a very strong run coming on the stock. On Friday, it rallied somewhere around 5%. In fact, it has only picked up from then. Today also gains close to 2% or thereabouts. In fact, the trigger for the rally on this stock is, of course, BofA upgrading the stock to buy from neutral. In fact, it sees a target price of 5,550 or thereabouts on the stock. It believes that all the segments are well set for positive growth in FY25, and exports, of course, have also turned a corner, and stock is up somewhere around 45% so far this year, Amar. Price to earnings ratio, if you look at, if you compare it with the likes of TVS or Eicher, it's a little more comfortable. but compared to a Hero Moto, probably it's a tad bit expensive. Talking also about what Rajiv Bajaj had to say about the company, he was on CNBC-TV 18 today, and he said that the company is planning to launch its biggest ever pulsar in FY24. In fact, upgrades to its motorcycles, and one big pulsar launch, as I mentioned, is going to be key going forward in this financial year. Chetak will also be getting upgrades, and new CNG bike is also on the anvil. So lots of cues to watch out for when it comes to Bajaj Auto. In fact, he's also mentioned that by January 2024, the Triumph brand should touch 10,000 in sales. So looks like everything is working pretty well for Bajaj Auto. On the charts, would you say this is one bet that one should look at vis-a-vis, say, a Hero Moto or Eicher going forward?
Yeah, I would say if you look at the structure of Bajaj Auto from a long-term perspective, the trend is very strong, and be it the monthly charts or the quarterly charts. So they clearly point towards a very strong upside. And what we've seen for the last couple of days is that the volumes have been significant, and even the delivery quantity has been significant the last couple of days. So that clearly points that these levels are where I would say majority of the investors might not be very comfortable entering at any stock, and that's a mass psychology and a human psychology also. To enter at high record levels is a challenging task for anyone. But having said that, it was consolidating around the 5,000 odd levels, because if we go back in time, so somewhere towards July, third week of July, it was trying to breach the 5,000 mark, but it did not reach that, and from there it corrected all the way to 4,400 levels. Currently, it's around 5,200 levels, and also on heavy volume. So this is one stock which definitely can be in anyone who's looking from a long-term perspective. But yeah, on corrections, this is one stock one should definitely look at. It's very strong on the charts.
All right, look at buying Bajaj Auto, on dips. That's the call. But what about the EV facing stocks like a Sona BLW? On a 6-month basis, the stock has done fairly well. But if you look at how it has performed over the last 1 month or so, it has lost some bit of steam. Long term, everybody is fairly bullish on this stock. But what about with a 4 to 5 month perspective? How should one play into this stock now?
So if I look at Sona BMW, so this is one stock which seems to have witnessed some upside, and currently I would say that one needs to be slightly cautious in this stock.
All right, exercise caution when it comes to Sona BLW. But FMCG as a pocket, Amar, didn't do all that well last week at least. Today it did manage to stage some bit of a comeback. But of course, there are concerns of El Nino conditions building up. Then, we've seen crude prices also inching up. So going forward, do you think FMCG is one pocket that one should really be cautious with? And we saw Dabur doing pretty well today. There are some bullish reports coming in on this stock, and analysts are expecting 16% kind of an upside on the stock going forward. But would you concur with a positive view on a stock like Dabur now?
See, if you ask me, Dabur really is one stock which has not gone anywhere. So, and that has been for, I would say, it's since almost more than a year. So the stock hasn't gone anywhere, hasn't given any returns. And if you ask me, I would say that this is more of a range play. There's nothing much in the stock right now. 500 on the downside, 600 on the upside. That's a consolidation zone. So currently it's around midway, 565 odd levels. So I don't see much happening in the stock till the stock sees some breakout. Even on the long-term charts, they really don't inspire too much of confidence as far as Dabur is concerned.
All right, that's the view on Dabur. But what about a Tata Steel, Amar? There's been a positive development. They've inked a deal with the UK government, so that removes some bit of an overhang for the stock. But on the charts, when you look at some of these metal names like Vedanta, of course, which is grappling with its own debt issues, would you advise anybody to take positions here in some of these metal names?
See, if you ask me about Tata Steel, the structure definitely remains positive and strong. There's no doubt about it on the long-term charts. But on, I would say, when I'm talking about the long term, I'm referring to the quarterly charts and the yearly charts. But from a monthly perspective, on the monthly charts, we see some sort of consolidation. So what it effectively means is that the stock on the upside has got very strong resistance coming around the 135, 140 zone. Whereas on the downside, the stock has got support around the 100, 110 band. But this is one stock on, again, just like Bajaj Auto, this is also one stock on any correction one should look at a buying opportunity. And but for any significant major rally, the stock needs to sustain above the 140 mark. Otherwise, it could be in for some consolidation.
Right, that's the view then on the metals pack. But as I'm looking at our live feed, we're getting some queries, so might as well take them up. There are some queries on oil companies. Of course, we've seen the government increasing the windfall tax on crude to 10,000 rupees per ton, and doesn't really bode well for the likes of ONGC, Oil India. But despite that, we saw some bit of an uptick coming in on these stocks. So what are your views on some of these oil companies going forward, given the fact that, of course, we've seen crude also come back in a big way and now inching towards $100 per barrel mark?
Yeah, I would say that ONGC was, if you look at ONGC, these are stocks which really haven't performed very well. They did manage to bounce back from the lows. Currently, it's around 185. But if you look at and from a long-term perspective, the stocks have not been able to reach significant levels. But technically, if you ask me, the stock remains positive on the chart. So on the medium-term, long-term charts, the stock remains positive. However, if you look at the chart, so somewhere around currently it's around 186, 187 odd levels. So it had made a high of almost 193, 94 a few months back. So that's going to act as a zone of resistance. But the bulls are in favor. I would say they have a stronger position as far as ONGC is concerned from a medium term perspective. So any correction can be used as a buying opportunity. The stock seems to have formed a strong base around the 170 zone. So this is for ONGC.
All right. So what about the OMCs then, Amar? BPCL was among the top gainers today on the Nifty. But the likes of IOC, HPCL, how would you view these stocks now on the charts?
So if you ask me about HPCL, so HPCL, again, technically, this is one stock. If you see on the charts, you'll say it's like just meandering. It's not, it doesn't have any trend. It doesn't have any triggers. It's, I would say it's more of a range play. Even the long-term charts clearly point towards a range or a consolidation in this stock. So again, it's currently around 257 odd levels. So any pullback towards 200, that's a buying opportunity. Upside resistance is around 300. So what it effectively means is that the markets are not expecting any major, very strong positive triggers in the near future. Otherwise, that would have reflected in the stock price or the structure of the chart. So that's not there. So that tells me that it's more of a consolidation. But yeah, it's a very good range play. So any correction that can be as a buying opportunity. Again, on the higher side, you need to book profits around the 280, 300 zone, because only if it sustains above the 300 mark, then we could see some significant rally, which doesn't seem likely in the near future.
Right, that was about the OMC pack then. But we were talking about the PSU banking pack earlier. But if you look at the private banking space, a lot of catch up needs to be done there, given the fact that if you look at the Nifty Bank Index, ended at the low point of the day. In fact, over the last week also, it has underperformed its PSU peers. So would you advise investors to now stick to PSU names as trading bets, or do you think it's time to look at some of these private banks and buy them on dips for the long term?
See, private banks had their own share of, I would say, interest which was there. And also we need to remember that the market cap of these private sector banks is significantly higher when you compare it with these PSU, many of these PSU banks, which are a fraction of what the market cap of these large private sector banks are. So that also tells that there is some interest which is happening in the PSU banks. And PSU banks have been more or less, see, if you look at the auto industry, if you look at the infrastructure, if you look at other industries, somewhere or the other, the banking and finance plays a very important role. So if these sectors are to grow in the future, then banking and finance would play a very important role. And PSU banks are also now trying to play catch up. And if we go back in time, you'll see that many of the PSU banks still are trading at 1/4, 1/5 of their all-time high prices, in spite of the rally that we've witnessed. So I would say that PSU banks still appears to be a good opportunity, but one needs to be slightly cautious given the sort of rally that we witnessed in many of the banks in excess of 50%, 60% in few weeks.
Right, two last questions to you, Amar. I wanted to ask you about, the entire rail and defense pack. We've seen, a stupendous rally coming in. Some of them do come under profit booking every now and then. But would you still see a lot of upside in some of these stocks? More steam left?
The defense is an area which is definitely has a very bright future. There's no doubt about it. But the big question, if you look at Bharat Dynamics, stock has been a multi-bagger. Currently, we are seeing some sort of consolidation in the stock. Stock is around the 1,000 level. So if there is some further correction in the stock, say somewhere around 950,000 zone, that can be a very good buying opportunity. If you look at the other stocks, so there also, if you look at Mazgaon Docks, so this is very strong on the long-term chart. So clearly tells me that these are stocks on any correction, they should be used as a buying opportunity. In spite of the rally that we've witnessed, we've seen again, it's a multi-bagger almost fourfold from recent high compared to the recent lows which it had made. So clearly tells me that there is the inherent structure of this sector has changed. And there's a lot of interest going forward because of Make in India and also because of the export opportunities which have emerged for these sectors. So this is one sector one should definitely have in one's portfolio. Apart from this, power is also one sector one should look at from a long-term perspective.
Right, you mentioned power. Actually, I want to ask you your thoughts on stocks like NTPC, CESC at the juncture. Do you like any of these?
Yeah, NTPC, if you see, NTPC was one stock which was at a point of time, just like ITC was not going anywhere, was not giving any returns. But if you look at the stock currently from a long-term perspective, if I go back in time and I look at the stock, so somewhere or the other, I'm seeing that the stock had made a high of 242 in 2008. And the recent high is almost around the same level. So that clearly tells me that the company is doing exceptionally well, and the long-term charts looks strong. So this is one sector one should definitely look at. But at current levels, one needs to be slightly cautious because the stock has moved up very sharply from almost 120, 130 levels, I would say, since October last year.
Lastly, your thoughts on IT. We saw IT cooling off after 2-day, up move. Do you think this is a good buying opportunity for, stocks like TCS, Infosys, or do you think mid-cap IT is one pocket that one must be invested in at the current juncture?
So if you ask me, TCS is, I would say, positive on the charts, but mildly positive because there's some sort of consolidation happening there. On the upside, we see resistance around 3,800 odd levels. On the downside, support around 3,300 odd levels. So it's more of a consolidation play. And if I look at Infosys, again, Infosys also paints a similar picture, but between the two, TCS is stronger on the charts. So from a large cap, I would say IT, TCS is one stock one can look at. And amongst the other stocks, if you ask me, Persistent is there, which has significantly rallied, trading at record highs almost. So this is one stock one can look at on any dip or correction. It's around 5,800 levels, but significant correction only one should look at entering the mid cap or the small cap IT stocks.
All right, that's the view on IT then. But before I let you go, Amar, any kind of recommendation for viewers for the week or for the next couple of weeks? Anything to watch out for?
Yeah, I would say amongst the PSU banks is one one can definitely look at. Like for example, PNB is one bank one can look at. Bank of India is another because Bank of India has also reached some major level. So sustaining above the 110, 112 mark, it has a potential to rally towards 125, 130 odd levels. So that's one from the banking space. And if you ask me from the one more stock which I would look at is Sun Pharma. So this is one stock which is very strong technically on the charts, but right now it's in for some consolidation. It's not able to breach the 1160, 1170 zone. So on any correction, this is one stock one can look at.
All right, so those were a few recommendations coming in from Amar for the next couple of weeks. But with that, Amar, thanks a lot for joining in this afternoon and sharing your thoughts with us. We discussed quite a few stocks and wish you a very, very happy Ganesh Chaturthi. And of course, we look forward to having you on my show Morning Trade pretty soon.
Thank you, and wish you the same.
Thank you. Well, with that, we've come to the end of this edition of Closing Bell. From me and the entire team, thanks a lot for watching. If you have any comments, leave them in the comment section below. And of course, wishing you and your families a very happy Ganesh Chaturthi and a very happy festive season. Come back and join in on Wednesday morning when I get you the pre-market show Morning Trade at 8:30 a.m. and we'll be taking up all your stock-related queries as well. So don't forget to tune in. But for now, goodbye. Thanks a lot for tuning in. Stay well and of course stay tuned to Money Control for all your other news and updates.